Well, good afternoon, everybody. Welcome to the September 15th edition of Bull Sessions. My name is Mark Robertson. I'm joined here by Ken Cavola and our bullish club of investors, as denoted by the picture up at the top. Good afternoon, Ken.
Good afternoon, Mark. It's great to be here today.
You know, I'm never quite sure what we're going to talk about. And then the next thing I know, I have a pile of about 18 things I would like to talk about. But we'll just kind of pick two or three of them and take it from there. Starting with the picture on the left, I think I could open an investment therapist office for some of these newcomers to the stock market that feel like the stock market is treating them like that Matador on the left. I used to hear quotes, and in fact, Hugh was sharing some of these fairly recently from some of the forum that he hangs up on or hangs out with and on, that they were basically, they're caught up in this spirit of momentum, and for the last couple of months it's been, everything just keeps going up. And I guess my response to that is until it doesn't, and then that tends to hurt quite a bit. So yeah, we'll talk a little bit about that. Thanks for your participation in Cleveland virtually on Saturday, Ken. I thought it was an enjoyable session.
Yeah, I thought it went real well. Excuse me, Mark and I we were supposed to be visiting there live. We had taken that date over a year ago, and we were able to do a shortened version of our Two Guys presentation as a virtual conference, and they were able to bring in 100 and a quarter people, and it was an interesting hour to spend. We covered a lot of territory. I think that there's a slide later on that's going to show you where you can begin to access some of these kinds of materials outside of the round table and the topics that we do. But I'll wait till we get to that slide before we talk about it. I love the bull and the Matador getting skewered right there in the behind.
Yeah, can't be a pleasant experience. And then we're going to close this afternoon with a few moments with Morgan Freeman there on the right, and some of the data stuff that we're doing that is just on the verge of really getting pretty wild and interesting at Manifest Investing. So let's go ahead and get underway. Here's the disclaimer slide. No investment recommendation is intended. This is all about education, and that word demonstration is pretty powerful. We try to illustrate the techniques and philosophies of the modern investment club movement, whether they're as interpreted by Manifest Investing or promulgated by NEIC Better Investing. That's what we're here for, to share ideas and explore and discover, etc. The views are our own. Please do your own homework. We do have roundtables that we hold a webcast. They are free. Please invite your friends. We do them on the last Tuesday of every month at 8:30 Eastern Time. If you'd like more information on that, you can certainly write to me, Mark R. at manifestinvesting.com. If you'd like to be added to a reminder list, or if you have a friend that would like to be added to the reminder list for these types of events, including those roundtables, send an email to N as in Natalie, ncavula1 at comcast.net. Any follow-up from the session, please feel free to write me at markr at manifestinvesting.com. So let's go ahead and get underway. We've been doing these for a while. Our topics are piling up a little bit, Ken. Today I thought we'd take a little bit of a tangential look at the S&P 500 passive investing. We'll save that for last. I did want to take a time out and point out that the January effect comes to September. Would you like to take a moment and explain the January effect for those who may not be familiar with it, Ken?
Do you really feel that it's happening that early now, Mark? That's an interesting take, because I knew that it had kind of moved into the year prior, but I never realized that your feelings were that it moved into the third quarter even. So
I definitely had put it in November and October in the past, but you just heard the question from Carol and Bonnie in the green room. People are actually thinking of some tax-related accounting as early as
Yeah,
September.
I think you get a wealth of selling in the last couple of months of the year. A lot of it tax related, you know, and please, folks, tax laws do change year by year by year. So stay current on whatever the tax laws are so that you know what you're doing. But the January effect basically is that tax selling has passed. There's not as much supply out there as there might be in November or December. And that usually has an effect on the price of stocks. You know, stocks are a commodity just like wheat or corn or anything else, and they operate by supply and demand, just as any other thing that you buy and sell does. And January, you seem to get this shortening of supply, and therefore stock prices tend to rise a little bit, at least for the first couple of weeks of January. It used to be a much longer period of time, didn't it, Mark, that rise was kind of noticeable?
Yeah, well, it was more concentrated in December. George Nicholson used to publish an article almost every December reminding everybody that maybe they should look at some of their, especially smaller companies, and take advantage of some of the price drops to basically get out and then get back in January. That's really what it's all about.
Yeah.
I do want to, Ken, I want to point out that you do kind of cut me kind of deep here. You just referred to my stocks as commodities. And you know, since I've got children and grandchildren named for some of the stocks in my portfolios, um, I'm kidding everybody. Yeah.
Well, I'm surprised they let you name your oldest grandchild Lincoln. I mean, that's a Ford product, Mark, you know. So,
Ooh, you're
ooh.
now you're rubbing salt in the wound. All right, so we'll come back to some of these other topics in future weeks. Couple of my favorites. I'm gonna love the one 6 bullets down. Friends don't let friends become average investors. We're gonna have some fun with that one. But if you've got a topic out there and you're in the audience, you'd like to see us cover it, feel free to send us a note. Send it to either Ken or myself, and we will add it to the list and take it away. All right, well, there's the Matador. I thought everybody could use a close-up view of the bull misbehaving himself. Bulls do get frisky from time to time. And I'm just reminded our daughter actually spent the summer in Spain where she attended bullfights and actually was in the streets of Pamplona. So it's kind of a family thing for us, I guess. But yeah, many people that are new to investing who thought, what could possibly go wrong during June, July, and August got an answer to that question in September, at least so far in September.
It was interesting today, Mark. I listened to an economist who was representing a think tank. Now, he's not in the group that actually calls the beginning and the end of recessions. That's an official government group that actually tells you when the recession has begun and when it has ended. But he says the recession that we were in is now over. And he says history will prove him right in the next couple of months. So we're starting to hear some talk that this has been a very, very short recession. Now, of course, there was a nice debate as to whether the gentleman was right on or whether he was out on the fringes or not. But just to hear it on national television was kind of interesting.
Yeah, it'll be interesting to see how that unfolds. And by the way, nobody was listening to you, Ken, because they're all reading. I had advanced the slide a little bit prematurely, and they've probably...
That's okay.
I find Blaine Rollins, he's out of 361 Capital in Denver, to be a real wealth of information on a weekly basis. And in our This Week updates, I often include input from Blaine, and this is just Blaine's reminder that September can get ugly. Because what you're basically looking at is average monthly returns for the 12 calendar months. And there's an old myth out there about October being the nastiest time in the stock market, but it actually belongs to September from a factual basis. And Blaine was actually picking a little bit on the Robin Hood investors. I loved the Robin Hood investors, by the way. interesting stuff. But the other point, this is kind of what I'm getting at with the January effect a little bit, Ken. Especially if the carnage continues for the rest of the month as this happens. The one thing that we've always liked to point out at Manifest Investing, that this is when you should probably be actively shopping, because notice that the next 1, 2, 3, 4, 5, a little bit down in February, 6, 7, we're heading into the best time for the best consecutive 6-month run for the stock market. So time to be shopping, I think. Discovering some ideas. We'll be talking about that later. Any other thoughts on that, Ken?
Well, I think it's interesting that October has that reputation. I think a lot of it comes from 1929, where people are still, referencing a couple of days period back that far away. But I'm just kind of looking at other months here, and my goodness, there's maybe a couple of months that maybe October isn't even the second worst month,
February gets to be pretty dicey, and people who forgot to sell in November and December. Interesting stuff. Anyhow, let's press on. A little bit of viewer mail. As a reminder, we had committed, and we will cover in the last Tuesday of every month, basically a mailbag session, but this was a question received. Just wondering, what in the world are you guys talking about when you say invest regularly all the time? What are your thoughts on that, Ken?
Well, I think the phrase is it can mean whatever you need it to mean for your investing supplies, the supply of cash you have available, the amount of capital that you want to commit to investments. But I think the idea is that you shouldn't try to time the market. You shouldn't try to hold all your cash in a pile and then jump in when the market's at its lowest point and then pull it all out when the market's at its highest point. I know that's the instinct of a lot of beginners when they first get into investing. They get so excited when they make some money that they want to make it, quote, safe, unquote, so they yank it all out. And then they're waiting to get back in, and sometimes they're fooled because good periods of investing can last for more than a couple months, just as bad periods for investing can last for more than a couple of months. I think what Better Investing has in mind when you say invest regularly is that you should be committing a relatively equal amount of funds on a pretty regular calendar. Now, for some of us, that might mean quarterly rather than monthly. For others, it might mean a very small amount monthly, or it might even mean small amounts on an every other week basis, again, depending on how much capital you have to allocate. But I think it should be on a regular basis. I didn't know this question was coming, but I spent this morning today rebalancing the IRA accounts that I manage for my wife and for myself. I'm committed, we've committed ourselves to rebalancing those accounts about every quarter, and I try to get it done somewhere in the last 2 or 3 weeks of each quarter. Well, September 15th puts me at the end of the calendar third quarter. So it was time for me to allocate some of the money that we had earned from dividends and to rearrange some of the stocks that Mark was referring to a couple of slides before that might have made their run and have very little potential left going for the next couple of years. I'm trying to keep the potential high in the IRA accounts. I also try to keep a fair size cushion of cash, so that if everything should head south, our retirements are still fairly safe with the kind of cash we would need to be able to ride through a year-long or even a 2-year-long disaster in the stock market. So regular to me means rebalancing quarter by quarter and adding new capital that's come into the portfolio by way of dividend. That's a pretty thorough answer, Mark. Do you have anything to add to it? I don't
Well,
know.
yeah. The one thing I'd like to mention in our special case, I'm not sure you're aware, Ken, but you don't have to do a required minimum distribution this year.
Absolutely.
And I know it's something that you've gotten in the habit of doing. So if you would be interested in just doing a distribution and sending it to Mark and Wendy, to keep the practice in place, I would say we're receptive to that. Yeah.
Well, we're going to keep the money in the IRA accounts, and we're not taking a distribution this year. We've managed to have enough funds outside the IRAs to live a COVID lifestyle at least. So we're
All
not
right.
taking a distribution, and that's going to save a nice chunk of income tax this year.
Well, just let me underscore then before we move off the slide. Invest regularly. I think it means, like Ken said, it can mean anything to different people. I'm thinking of people with 401ks. If you're getting a paycheck, you should be investing. Setting a portion aside in 401ks make that easy to do. One of the main foundational principles of the modern investment club movement is to take a chunk of money, whether it's 20 or 50 or a couple $100, and set it aside on a monthly basis. And if you really have to dig out the speech by Ed Finn, he's the publisher of Barron's, who was at our national convention many years ago in Philadelphia, and he talked about investment clubs and what a powerful thing it was that they come together just once a month. And so they basically can't screw it up trying to time anything from month to month, and you just simply put the money in every month. And the second part of the question, though, is where do you put it? That's the other answer. Investing money into an investment club, even if it sits in cash, still qualifies as invest regularly. Now, the cash that's in either an individual portfolio or an investment club account should always be looking for a home with an excellent company at an excellent price. So that's what we're always out there trying to do. So I think we'll leave it at that. I see that Hugh has probably joined us. He's in the audience. I just thought I would share the fact that this article is out there. It's on the Manifest Investing Forum under the This Week Update. But there was an article that came out, I believe, just yesterday or within the last couple of days where British Petroleum, or BP, I guess they are now, came out with this article that said that the growth of oil demand, that's growth of oil demand, that's a pretty big deal, is over, and that they're the first super major to basically describe a changing environment and probably a responsive shift in business model. So that article is out there. If you can't find it on the forum, send me an email. I'd be happy to send you a link to it. But I'll show you where it is when we get to wrapping up here today. But Hugh, are you actually unmuted? Do you have thoughts on this?
Yeah, I'm unmuted. Can you hear me?
Yep, you're
Yes, we
doing
can.
fine.
Excellent.
Well, BP is one of your roundtable favorites. What do you think of what
Yeah.
these guys are saying?
Well, BP publishes a really excellent summary of the energy market. They publish it annually, and they look at oil and renewables, nuclear, the works, and change from year to year. And actually, oil has been growing pretty steadily for a very long time at about a million barrels a year worldwide. It's closing in on 100 million barrels a day. Sorry, a million barrels a day. It's closing in on about 100 million barrels a day now. It's about 90. It was 96 or 97 last year. Obviously, it slowed down dramatically this year. But I'm not sure. I think BP has been to some extent a little bit conservative. I can't imagine that oil will slow down that much when things recover. That it'll be flat. I think it still should continue to grow. But I think it's right in the sense that the steady growth phase of oil is coming to an end. Technology and other arena, particularly some renewable solar as an example, is improving by leaps and bounds. So it's only a matter of time before electrically powered vehicles, which actually was the norm to some extent at the start of the auto industry, that they come back into vogue again big time.
Well,
But if you get a chance to go to the BP website, the investor area, you can download that report, lots of charts and graphs to see how things are doing, and it makes for a very interesting read.
absolutely.
I think BP is ahead of the game, actually. I think it's right in that regard. This
Well,
focus.
let me ask both of you the magic question then. If you're doing studies, stock studies of any of the major petrochem companies, both Ken and Hugh, would you be reducing growth forecasts?
I have, yeah.
Okay.
But the beauty is right now, it's you can still reduce growth forecasts and things still look rosy for the future because the prices are so low.
Yeah, right. Your thoughts, Ken?
Mark, I tend to stay away from oil producers, anything that actually pulls it out of the ground, or even the people that distribute it through the pipelines. I do invest in some of the people that support the oil fields, and I have not been significantly reducing growth for those, the Schlumbergers of the world, things like that. But at the same time, they've not been very good investments for quite a long period of time, in my estimation. So I haven't had to take a real deep dive into those companies recently. So perhaps when I get to the point where I'm going to be very interested in them, perhaps I will be significantly reducing things. I don't have any exposure right now to the oil fields in my portfolios, any of them right now.
Yeah, I guess I would agree. I mean, Schlumberger has been frustrating for quite some time, and definitely would be influenced by this type of big picture thinking for sure. All right.
I will say that I've been looking at natural gas producers. I've been seriously considering and doing some deep dives into natural gas. I'm just kind of reflecting what's happening in my own state right now, but my utility, which represents probably 55–60% of the state of Michigan, has pledged to be all natural gas or renewable energy by 2030. So they're moving ahead quite quickly, divorcing themselves from oil and coal. So, but oil itself, I just have stayed away from.
Yeah, and I don't know if Hugh, if you're seeing outages in the Southern California area, but California has certainly been moving fairly aggressively, and I believe they find themselves kind of resource constrained out there. And I'm sugarcoating. I know that rolling blackouts are becoming fairly normal in California these days.
Yeah, it happens. It hasn't happened to me yet, but it's been happening to some extent. A lot of the electricity gets imported here as well. So
Mm-hmm.
they boast about being very, very green. But that's with generation within the state. They're buying electricity from outside of the state where the mandate towards renewables is not as strict.
All right. Well, I'm sure we'll be coming back to that subject at some point, but let's go ahead and move on. Many of you in the audience recognize Morgan Freeman. He's our poster child or patron saint of data. And we've actually made some pretty good strides on the data side of things at Manifest Investing over the last couple of years. And I just wanted to give a quick update here today that we're bringing the funds all back to life. They've been in the quagmire of interrupted data and shuffled data fields and all kinds of stuff for the last far too long. And we're getting back into it, especially on some of the advisory side. For me, it's just something that we have to get done. I just wanted to share some stuff that actually has impact on our annual small company safari. And this particular slide is in the update every week, and it's a work in progress. As many of you in the group already know, many of you in the audience today have sent us suggestions for small companies to add to the Manifest Investing universe. And this quest is in full mode right now. As we go through and we update these mutual funds and exchange traded funds, we're going to see an eruption of small company ideas. And I'll give you a feel for that here in a second. But Global Cord Blood actually came from Saturday morning in Cleveland. And I believe you found that with the Better Investing Small Company screen. Would you like to give a quick description of that, Ken?
Sure, it's a preset screen. It's part of your SSG Plus. If you've never used any of the preset screens, I would urge you to play around with them a little bit. The mechanics of the screen are very nice. It's basically a single button press. Gives you a list of companies based on some preset criteria, and then you can step through those companies one at a time, checking out a thumbnail of their visual analysis. It makes it quite easy to go over 30 or 40 companies in a very small amount of time and push those down to a manageable sum of ideas. Global cord blood, right now when you press the small company button, and you can find it under the spyglass on the SSG Plus. Once you press the small company button, as of last Thursday, only 7 companies were displaying. Now, during normal market times, that screen is displaying as many as 25 or 30 companies. So it's pointing, at least in my mind, it's pointing to the fact that a lot of things that we're interested in are a little bit overvalued at the present time. But global cord blood is one of them that comes up on that screen. I would urge you to be very careful. It could be another hogs waiting to jump on an American investor. This is a Chinese company with very little known about it. It has a really nice glossy web page, all kinds of pictures and things going on, a nice investor presentation if you can find it, but it's there. And all those things were there for the stock ticker HOGS about 10 or 11 years ago, and that turned out to be a complete fraud. And how low could it go? Where it went down to nothing. So be careful.
So
Buyer beware.
once bit, twice shy, huh?
Absolutely.
Well, when I first mentioned it to my spouse, who does pay some attention to investing, she saw China and said, no, absolutely not. And then I pointed out that it was headquartered in Hong Kong, and she felt a little bit better about that. But anyhow, we're going to watch this for the ideas to roll, and it is a minefield. You got to watch yourself when you get into the clinches here.
I will tell you, Mark, if just having the name Marty Eckerly attached to a stock tells me that that's one I want to take a look at. Marty, over the years, has always had really good ideas, and he doesn't steer us wrong too many times. So I would look at that investor's title company also. I appreciate Marty and his abilities to ferret out little known companies and then publicize them to the rest of us. So
yeah, that's certainly not a small
one that I'll look at. Yeah.
Yeah, but it's definitely worth a closer look. I have actually already added it at Manifest Investing, and it's worth a closer look. Definitely worth a closer look. It has to do with mortgage titles. All right. You guys are probably tired of seeing the slide, but I'm not tired of it. Projected return on value, you know what we've begun to think about it, and just in terms of the results. If you're not familiar with it, you can go back to former sessions of bull sessions and take a look. You can also go back to the presentations made around Christmas. And Ken, I would be incredibly surprised if we aren't talking about this if we're doing programs out in October and November. It's just a pretty compelling, interesting source. You guys can all read the talking points to the right. But what it comes down to is taking the core information of a stock selection guide, and yes, that includes taking a look at the top line, the sales or revenues, the historical trends, and piling on what is known by many of you as the magenta line, the pre-tax income or pre-tax profit. And now the visual image that is included there basically makes the point that on the original stock selection guides, they looked at the top line revenues or sales and the section 2A, the pre-tax profit, and they graphed those two elements. So the magenta line was there a long time ago, and there was no earnings line. And here, that's not a company that simply doesn't have earnings. They just they made the decision not to graph the earnings on that visual analysis that you see there. All right, so
Mark, while we're talking about proof right there, Phil wants to know, do you have a good data source where he can pull these particular numbers out, something that would be available to him to use?
well, any data source that will give you either cash flow or projected pre-tax profit. We demonstrated a few months ago that the total liabilities is very easy to access on Morningstar. It's on the first page of the financial summary, and the cash per share is also widely available. So yeah, all the numbers are out there, and you can put together a quick little spreadsheet. As we go through the next iteration at Manifest Investing, we will be including the projected return on value as one of our displayed items on the company report. So we'll be saving everybody a lot of work.
Let me suggest also that it's just a hint with computers, but a control F, hit the control key and then the letter F, and that's a way you can do a find on any web page anywhere. So if you get to the Morningstar web page to your company, for example, and you do control F and then type in cash flow, you should be able to get cash flow, and you might even be able to type in cash flow per share and get that whole thing if you put quotes around it. Same thing for total liability. You might have to do some division, on a spreadsheet or with a hand calculator, but I have been able to calculate these values without that much effort. And I think that it's something that most folks can do with a little bit of trial. Again, it's control F, and that'll search any spreadsheet. It'll search a PDF document. It'll search almost anything that exists on your screen. You can search with it. So give it a try and see how it works.
And we will be spending more time showing you places to get it, like Morningstar, and Value Line's got most of the information. They don't have directly have the total liabilities, but they will. So I've been going through and updating the data fields on a bunch of mutual funds and exchange traded funds, and this is limited to the top of the list. These are funds that have beaten the market over a 10+ year period. You can tell that by the right hand column. The relative returns are all positive. By the way, this list is there's only another 12 or 15 companies. Not that many companies outperform the major indices. And again, this just comes from our lessons of, we really believe that looking over the shoulders of people who really seem to know what they're doing, especially for decades, can be quite a meaningful exercise and source of ideas. And so what you're looking at here is with the update of the data, and using all of the data for the individual stocks at Manifest, we can actually attach projected return on values to all these funds. So I've shown you here the top dozen or so funds based on their weighted average projected return on value, from Lord Abbott up at the top, T. Rowe Price Health Sciences, and then there's a few interesting ones along the way there, but these are the ones that actually look pretty good from projected return on value. And then if you're going idea hunting, it probably wouldn't be a bad idea to sniff around in the holdings of a fund that has a par of 10, in this case, good long-term performer, Delaware small and mid-cap growth. Take a look at that portfolio as a source of ideas. And I can't help but notice, in fact, I'm going to send a graphic to these guys, the fact that Wasatch, keep in mind, this is a two-pronged tribute. We're talking about companies that have performed extremely well for at least a decade that are positioned well going forward. And Wasatch has 3 funds on this very short list. Pretty cool, though. People at Wasatch do know what they're doing. So if you ever hear of a small company discussion put on by the folks at Wasatch, that's worth tuning in to hear. So just a wealth.
Mark, Cynthia is asking why Brown Company hasn't made this list.
Brown Company falls just off of the list based on the ranking by PROV. Brown Small Company is on the top performers list. I think they're about 12th on the relative return sort. So they are near the top of the list. They're just a little bit, they're slacking a little bit. They need to pick some good stocks.
And then, Mark, I've gotten from a number of different people that they went to look at ITIC on Manifest and couldn't bring it up.
Oh, it'll be available after the next batch update, which will be within the next day or so.
Okay.
Yeah, it was added just this morning. Marty sent me the note this morning, and it's in there. It's just it's in the queue to be updated. All right. So just as an example, here's Lord Abbott looking at the actual funds. It's a 5-star fund at Morningstar, strong long-term performance. There are some tickers there that most of you that many of you will be less familiar with. 16 of those are uncovered by Manifest. We'll fix that this afternoon. So there are some interesting investing ideas when we dig into these funds. And the really fascinating part for me is that, and maybe I'm geeking out too much over this stuff. Tell me if I need to calm down, Ken, but this stuff is like continuously updated. So all of our funds are going to be literally continuously updating, which I think is really cool. Now, as Ken pointed out in the pre-session, with a mutual fund, they only update their actual holdings every quarter, but still the fundamentals and the day-to-day stuff is updating on those. So those aspects are updating. And I would point out that an exchange-traded fund, an ETF, many of them update, including the holdings manifest, by the way, every day. So interesting stuff. Going to have some fun. All right, here's our trivia moment. On the left, you have the Wilshire 5000 Vanguard Index Fund, the top 25 holdings. On the right, you've got the S&P 500 Mutual Fund, top 25 holdings. What's the only difference between the two? Well, main difference anyhow. You spot it yet? Those names.
I'm not getting anybody with, well, maybe something came up here. Nope, not yet.
It's kind of like Where's Waldo? I was stunned that they were this.
Cynthia says, is it Cisco?
Yep, Cisco's not on the list on the left, so that's one difference. Who's on the list on the left instead of Cisco?
And Kay says Tesla.
There you go. So Tesla's in the Wilshire 5000, and it's not in the S&P 500 fund. Fret not. You can compare the two side by side. Going 2 slides back, you'll find that they're dramatically similar. You know, the major stuff that we look at, considering that that's the only real difference between the two. Not much difference when only one holding divides the two.
Mark, we had an interesting question. If you could stay on that slide you were just on for just a moment.
Which one was I just on?
That one right there. Somebody was observing that Prove and Par, they track pretty closely to each other for a lot of this, except there are a couple of examples where the difference is approaching 2 to 1. When you have that wide disparity, what are we really looking at? Do you know? Do you have a good answer for that yet?
I would tell you what my instinct, after looking at hundreds of these pages already, my instinct would be that those would be funds that have a higher content of higher PE stocks. Imagine, if you will, a profile of the 25 stocks where you've got a few 80s and 100s and 120s, for the PE, driving up those pars. Whereas if you could almost just as easily say that those need to be conditioned downward. So you probably have richer PEs in some of those. I think it'll be fascinating to see when after I update all of those holdings in Lord Abbott's fund to see what happens to those two numbers in that top ranked fund. Like I say, that'll be probably done later today.
I must be beginning to understand that, because that would have been my answer as well. What I think we all need to remind ourselves of is when we're reading average PE numbers in Manifest, or when Mark is doing calculations right here, he's not conditioning the PE downward as we might do when we do a reasonable stock selection guide. He's taking the PEs that the analysts are assuming into the future and using those values. So when you see an estimated average PE of 45 on the Manifest charts, that's not Mark calling out a 45, that's the analyst community calling out a 45. And I think that's an excellent answer for the difference between prove and par when they deviate like this.
Yeah, and we know historically how those PEs collapse when they start to come back into normal ranges. So anytime you see a PE of 285, you already know what I think about that. I'd just as soon not even publish it. All right, good for now?
I think so.
All right, let's wrap up with just a quick reminder, and I wanted to just kind of get a kick out of this. I actually used that tab as my setting on my toolbar. I renamed my link to the Manifest Investing YouTube page MyTube. That could be kind of catchy, don't you think?
Yep.
I think that's a pretty cool thing. But I wanted to point out that we did some experimentation with both the Cleveland session and a couple other things that we've done to reach out on social media. And I guess I would argue that it's been a long time since we've seen anything like this. Look at those ages. And that's just people responding or reacting to the event promotion. And quite a few guys, I'd like to see more ladies respond to it and be involved. But the fact that we are touching this age group is pretty compelling to me. Probably.
How big's the sample size, Mark? How many people does this represent?
In this case, it would have been approximately 200 that responded to the ad in some way.
Okay.
So it's not a tiny sample, but it's kind of a prototype sample. Anyhow, for those of you that are not familiar with this, you can go to YouTube, just search on Manifest Investing. You'll be taken to the page that's displayed down below, and you've got the opportunity to go back. Here's the Cleveland session from Saturday. We were fully masked and compliant. So was the night. But you can see that we have our roundtables and our bull sessions saved there. If you miss one and you'd like to go back and catch it, or go back and listen to some of our thoughts on projected return on value that we've talked about a couple of times since July. Anyhow, there's several years, almost 10 years of videos, including almost all the roundtables, available just by clicking on this button right here. Clicking on videos. And then I would like to encourage everybody here, if you haven't subscribed, first of all, you'll get reminders anytime we post. But I have a selfish motivation, and it has to do with this picture up here. We're beginning to reach some interesting potential people that we can help. And when you hit subscribe, even if you really don't use it that much, if you drive up our subscriber totals, it actually messes with, in a good way, the algorithms that are in place by these social media companies, including YouTube. So if you would subscribe just as a personal favor to me, because it will raise the probability that we'll touch on somebody, along this entire age range, but especially these guys down here. Like I say, it's a selfish motivation, but I know how dramatic of an impact we can have when somebody really starts paying attention to this stuff in their 20s and 30s. And so that's just an appeal from me to you. Or if you have some buddies or friends or family out there that you think would benefit from some of these sessions, tell them to go and search for Manifest Investing on YouTube and consider subscribing. Same thing applies if you're watching it and you like what you're seeing, press the like button. And that also has an impact on the algorithms that are used to channel and divert the content and share with people. So I would appreciate that. A little bit of selfish promotion there.
Mark, is this where all of our roundtables are going to be put now, or are we running two different channels?
No, this is this is where all the roundtables are. What I will probably look into doing is separating them by category: bull sessions, investing topics, and roundtables, so that they're divided much like a library. But right now they're just there sequentially.
Okay, but the channel is just called Manifest Investing, though?
It is. That's not a change. That's okay. That's what it always has been.
All right.
But we would tell people to search for Manifest Investing Roundtable, and then that would take them to be more likely to land them on the roundtables.
Okay.
Okay. We'll leave you with a look at Lake Oakland. Some of that smoke and ashes that Hugh is experiencing is actually making its way across the continental United States, and that's what's happening to our sunsets. It's from a couple days ago.
Wow.
Lake Oakland, and they tell us that we're going to have orangey sunsets for a while to come. Pretty good stuff. All right.
Pretty.
Ken, anything else that you have, or Hugh, anything that you have in mind? I thought I would.
We've covered almost all the questions, Mark. Let me go through them again real quickly to make sure that I got the ones that I wanted to bring to everybody's attention.
While I've got you on the line, I wanted to show people in the This Week update where they can actually access. There's the Cleveland presentation there, but here's that list of companies. And if this is an active link, if you go to Global Cord Blood, we actually have a link which Ken will really enjoy back to his hogs. And then this is what Global Cord Blood actually looks like on a visual analysis. And in the spirit of full disclosure, small company, could be another situation like Ken said. I will often reach out to figure out, who else is actually following this company. There's a couple of articles that you can take in here, but I discovered that some pretty prominent investors with strong, excellent track records, Renaissance Technologies and Chris Jenner over at Rock Springs, are involved with this company already. So there's what it looks like, and there's actually a buyout offer, and there's more information here, but I find it kind of interesting that those people are involved. So I actually bought 100 shares just on the fly, just to get a little bit closer to it, and hopefully I'll avoid pulled pork moment with this company. But I'm having a hard time reconciling one of the things, and anybody out there that wants to figure this one out and enlighten me, these guys have almost $800 million in their checkbook, in their cash equivalents or cash on hand. And with 125 million outstanding shares, that's approximately $7 per share in cash. And that's driving the projected return on value crazy, right? Because of the way we look at that. I'm still trying to figure out what's wrong with this picture, other than, could they be making up numbers? And that certainly is a possibility, but those numbers have been that way for a long time.
Did they go and raise a bunch of money a while ago?
Could you repeat that, Hugh?
Did they raise money? I can check to see if they got the venture capital money. They haven't spent for whatever.
Look over here to see. This is what Y charts looks like, by the way.
Ann Manning is telling you to remember Enron, Mark, okay?
Remember Enron, yeah. Yeah, I do remember Enron. Thanks, Ann. You just jinxed my company.
Mark, is there anyway, did you look back at old annual reports to see if that cash
Well,
suddenly has jumped up?
that's what I'm doing here. Here's the long-term trend for cash over time. Like I say,
Wow.
I haven't found an issue yet. And these guys generate a lot of cash. It's basically a blood bank and an umbilical cord stem cell company with fairly rare licenses in China. And so far, I've not found a fatal flaw. And like I say, I really don't understand the balance sheet yet. I haven't given up yet. So I find
This chart that you showed, Mark, is coming from H-Arts?
this is what Y charts looks like on the institute.
Y-Charts, yeah, okay.
And then just one last thing for people who, oh, excuse me. One last thing I wanted to point out under the weekly updates. I'll turn a couple of these links on later, but embedded right in them, here's the material stronger listing from this week's batch at Value Line. Anytime you see a link, we basically share, don't do it all the time, but often we share the Value Line close and then a quick look at the business model analysis for the company. In this case, Jacobs Engineering. I just find that one to be pretty compelling. I probably should have bought this one instead of Global Gored, but some interesting thoughts on infrastructure, a really decent profitability picture, really stable when it comes to PEs. These guys are a force in the engineering and construction world. I know they're no stranger to many of you, and Value Line had some pretty nice words to say in this week's report. So again, just a reminder that we try to link to that type of content when we see something potentially interesting to our community.
Mark, we're getting a couple of questions. A question from Bonnie. Do they do any business in the U.S.? And I think she's referring to the CO, the cord blood company.
I think their business is confined to China, and if not China, the Far East at this point. Like I say, they're headquartered in Hong Kong, and I think the majority of their business is in those countries.
Okay, I've cleared our. Here's a comment from her, Blemkool. Do we know of any companies doing essentially the same kind of business in the U.S.? In other words, do we know of any direct competition in the U.S.?
That's a really good question. Let's look really quickly. There's 3 names there. That middle one is really tiny, but Sino, that's got to be one of the other licensed companies in China, and you see Hutchison, China. So nothing jumping off the page at me there.
Okay.
All right. Anything else, Ken?
Well, I think we're ready to wrap up then. So thank you, and thank you all for coming today. Nice audience today, and we'll talk to everybody again next Tuesday, right, Mark?
Yep, and go ahead. And again, we're serious. If you have a topic you'd like to see us cover, send us your ideas, your questions, and we'll see what we can do to tackle them, or at least come up with a lot of questions and a few answers.
Thanks a lot, folks.
All right, thanks a lot.
Good night, everybody.
Thank you, everyone.
All right.